This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Massar, along with, he's back.
I'm back. 2 days. 2 days where there was a lot of pressure on the market, especially yesterday.
It was kind of wackadoo.
It was. I can't stay away from watching the World Equity Index function on the Bloomberg terminal.
Really?
Yeah, it's pretty sad.
Are you sure about that?
Yeah, it's pretty sad. We saw some selling yesterday, but we're seeing some buying today.
Yeah, absolutely. What AI scare? We're going to dig into certainly some of that. AI is definitely a big theme on this Tuesday. It's a State of the Union Tuesday. Definitely top of mind. President Trump, his second State of the Union, now that he is in his second year of his second term. Although
they don't give a state of the union in the first,
because they've only been on the job technically, right?
But we've seen his states of the union in the past, in the first term. So
yeah,
I think a lot of questions about the politics and the optics of tonight, given what happened with the Supreme Court on Friday. That was another thing that I missed.
Yeah,
with the tariff ruling and the fiery comments that he made about Supreme Court justices. So a lot of questions about what the optics look like ahead of that.
Poly market alive and kicking about what the President Trump's going to do.
We're going to talk about that
later.
Today.
That's a deep tease.
Yeah, a lot in the 4 p.m. hour when it comes to the prediction markets.
Yeah.
I almost said gambling sites.
I know. Don't do that.
I won't.
Don't say that. Although some say.
Okay.
Hey, coming up, though, in the next 60 minutes, Jamie Dimon's 2008 warnings. Wait. And we listen to him with good reason, because remember, he is kind of the lone man standing among the Wall Street big bank CEOs that were there during the great financial crisis. So when he makes some reference to that, we kind of sit up a little straighter and take notice. Also
a big partnership, Meta's multi-billion-dollar investment in AMD. We got the details from Ed Ludlow in just a few minutes.
Yeah, this is a big part of what we're talking about, AI and more. Lauren Goodwin, economist and chief market strategist at New York Life Investments, on the trade and the economy behind it. And then
Sarah Levy.
Yeah.
She's back with us. She's CEO of Betterment,
roll.
talking about trading trends and AI. Can't stay away from AI.
No, we
can't get enough of it.
No, we cannot. Never, ever, any day anymore. Let's get to it, though, in terms of the trade. Let's turn things over to Charlie Miller.
All right, thank you very much. Welcome back, Tim. Here's what's going on. The Dow, the S&P, NASDAQ, all pushing higher. S&P 500 index is around the GIP screen, very close to session highs right now, up 53, 68.91. That is a gain of just about 0.8%. The Dow up 455, up 0.9%, making back some of yesterday's 800-plus swoon. NASDAQ, as tech stocks lead the way higher. NASDAQ, the composite index, up 1%. The NASDAQ 100 index up by 1.1%. 10-year at 4.02% with a 2-year 3.45%. Spot gold tumbling 1.3%, 51.57 the ounce. West Texas Intermediate crude down 7 tenths, 65.84 a barrel. And Bitcoin at 64,500 now. It is lower by 0.1%. Warner Brothers Discovery is considering a new takeover bid from Paramount Skydance, the latest salvo in a months-long battle for control of one of Hollywood's most famed studios. Paramount Skydance down 0.8%. Warner Brothers Discovery up 0.7, and Netflix higher now by 2.1%. Again, recapping, S&P up 53, up by 0.8%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Tim and Carol. That is a Bloomberg Business Flash.
All right, so appreciate it. Well, let's get to one of our most read stories on the Bloomberg today. JPMorgan.
When this crossed last night, first of all,
we were on air actually when headlines started to come across
really?
In terms of some financial metrics.
So I saw this late yesterday, and then 3 minutes later, Talia sends the email too.
I know,
because she's on top of it.
Because I don't know how she does it. I feel like Bloomberg goes right to her brain.
Yeah, it's wired in.
It is wired in. It is one of our most read stories though on this Tuesday. JPMorgan Chase CEO Jamie Dimon. We're talking about him. Asked about fierce competition across the financial industry, he said he's starting to see parallels to the era before the 2008 financial crisis, when a rush, as you know, to make loans ended disastrously. We don't need to remind you how rough that was. Jamie Dimon made the comments yesterday at JPMorgan's Investor Day right here in New York City.
Unfortunately, we did see this in 05, in 06, in 07, almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things, They're just doing dumb things to create NII or say they're, winning in the markets business, something like that.
All right, that, of course, JPMorgan Chase CEO Jamie Dimon at yesterday's Investor Day here in New York City, looking rather casual.
I was going to say, a little different look than we usually see.
Yeah.
But you know what? It was a lot of snow yesterday.
Yeah.
I don't know.
Everybody, I felt like we all had our boots on.
Still did Investor Day, though.
Yeah, they did. They did. They carried it through. All right, his comments definitely getting our attention again. Even Tim, who was home, getting, locked into what he had to say. Let's get more, though, on it. Kat Doherty's with us. She's Bloomberg News finance reporter right here in studio. Kat, whether it's cockroaches or he's making a weather forecast, when Jamie says something, it gets our attention. Tell us about the meeting and some of the things that stand out.
You're right, but this stood out more so than the cockroaches comments. He's made those types of jabs at the private credit industry specifically before. And yes, it's gotten attention, but not in the same way that Tim's right. When this headline crossed last night, I think a lot of folks were clicking through, and you can see in the interest even today, it's just continuing on, and it's generating a lot of talk amongst banking colleagues that are really kind of diving into the parallels that Dimon is drawing today. And he's saying that he's seen a lot of, his words, dumb things going on from his competitors across the street. He's not necessarily calling out the other banks. He's calling out the Apollos, the Blue Owls, these firms that have really generated, and not just attention, but the money that they are handling that is outside of the banks. That is what Dimon is drawing attention to, saying that a lot of what you saw with the 2008 financial crisis was the money that was being handled, that at the end of the day, that was with the banks. So now that the money has moved away from the banks, it's behind the scenes. He's saying that if the cracks start to emerge and you have the cockroaches that, again, he has called out before, that's not a new comment, but he's saying that that's where the underlying stress is, and he doesn't know when. He didn't make a call yesterday. I think that's important to note, of when this might actually come through. But he's saying it's a matter of the question being the timing, but he's thinking that it's going to happen at some point.
I know you want to talk a little bit about the history and what JPMorgan and what Jamie Dimon has seen, because he's one of the people who was there through the financial crisis at the helm of the big bank. He's the only one at this point.
He's the lone man standing, right, among those big bank
That
CEOs.
said, and you touched on this a little bit, Kat, with what you said about, you mentioned Apollo, for example. What are the specific that, if any, that he called out or that we can infer from the quote-unquote dumb things? Like what is he seeing?
He's referencing lending practices that if you are going to affirm, let's keep with Apollo, but there are so many others that we could use as examples. The pricing on these loans is so much different than, let's say, how you price Apple's stock. It's not as liquid, and so there might be underlying stress, but the price doesn't reflect that. But if there gets to a point like we've seen with some of the cockroach examples, where at the end of the day there's massive selling and then the price does have to reflect the underlying stresses, that's when, if those things start to pile up, it's a snowball effect. And you had Boaz Weinstein today. He's down in Miami, and he made very similar comments. He was saying that it is something that builds on itself, and you don't need too much of these specific instances that some are calling just one-offs and saying that it's not representative of the entire industry. But if you start to see those one-offs become 2, 3, 4, and all of a sudden it does build in, and the stress can turn into something much bigger. That's what Dimon is calling out.
Boaz Weinstein, Saba Capital Management founder, you're right, saying all you need is a snowball to start going down the hill, and it started. Blue Owl is right in the middle of that. I think we are in the super early innings of the wheels coming off the car. So, I mean, this gets to the lack of transparency, especially when it comes to the private markets. We keep talking about this. And so I'm not going to ask you to necessarily go into, a primer on the private markets world, but that's part of what we're getting to. The banks are highly regulated. A lot of investment firms are highly regulated, right? Oversight and transparency in what is kind of on their balance sheet.
That's right. But when we're talking about these loans that are outside of the banks, the mark to market, you might be able to hold a loan and say that it is worth, let's say, 90 cents on the dollar, but the stress that's underlying might, if it does eventually trade down to 60. Now, that's going to be a lot different in the private credit market than it is with the banks, especially if the banks are the ones that are holding these loans. They have to disclose, and the pricing is a little bit more transparent.
Okay,
but there are parallels. And what's also interesting is that the banks, too, are getting into private credit. They're setting aside their own balance sheet for some of these deals. So it's an interesting dichotomy when this is business for them and they're losing some of the business if it is going to firms outside of the banking system. So they want to be in the game. They want to put their money towards some of these lending opportunities. But that competition might end up growing the market even more because you have the firms that want to get in and they want to really put their money to work.
Yeah. And like there's been such a push, right, when it comes to the private market world to get into things like 401ks and so on and so forth. And this is why stuff like this has even more importance.
Should they? Yeah, I'm not even going to ask. Not even going to ask.
I'm not going to say whether we should, but I'm just saying, you know, full disclosure, you need to know, right? Especially when you're talking about people's retirements and all that good stuff. Kat, thank you so much. Kat Doherty, she's Bloomberg News finance reporter, joining us right here in studio. And as we've mentioned, this is one of the most read stories. I feel like it's already a very big theme and big story this year.
Oh.
Is Blue Owl one canary in the private market coal mine, or is it the beginning, like Boaz Weinstein seems to say, the beginning of an undoing?
And I think fair to put Jamie Dimon in the category of concern.
Yeah, exactly.
Yeah.
Right? It's a big, big thing. All right. Our thanks to Kat once more. Hey, now we want to get to some of today's trade and economic fundamentals behind it all. There's a lot going on. You know, things like that little thing called inflation.
I think it will be addressed tonight in the State of the Union.
I think it will, right?
Yeah.
And affordability at large.
Oh, no question. I think many people argue, though, it's still a problem. The Fed largely reminds us, yes, it is. And yet there are those that are concerned about the slowing U.S. labor market. Earlier today at the 2026 National Association of Business Economics Policy meeting underway in Washington, D.C., Bloomberg's Mike McKee caught up with Fed Bank Reserve President of Chicago, Austan Goolsbee, to talk about the Supreme Court's ruling and how it could impact U.S. inflation.
When the part of inflation that has come from tariffs is supposed to go away, is supposed to be transitory, and when you see things like the forecasts say inflation's going to peak out and then start falling by the end of 2025, and then that moves the goalpost, well, maybe it'll be the first quarter of 26, and now they're saying, well, maybe it will be the second quarter of 26. That's not a great sign. We need to see, we should see, especially on the good side, if the tariff inflation is transitory, it's supposed to start going away.
That's Bloomberg's Mike McKee catching up with the Federal Reserve Bank of Chicago President Austan Goolsbee a little earlier today.
Well, and this is kind of the predicament we are when we see that Friday decision, Supreme Court decision, when it comes to tariffs. What does that mean? Do we take away inflationary pressures, right, when it comes to costs? This is something we've talked about, that ultimately the consumer is going to pay a higher cost. Some companies have been eating that higher cost because of tariffs, but eventually, you know, we're seeing things already being passed on to consumers. And Austan Goolsbee kind of getting to this point, like, where are we? Like, it's a kind of a moving goalpost. Like, all right, a big decision on Friday, but then we have the president over the weekend, and we talked about this a lot yesterday, of imposing his own kind of across the board tariffs. And so we're trying to figure out if tariff inflation is transitory. He said, you know, it's supposed to start going away. And that's kind of like the question and predicament we're in.
Well, let's get that question over to Lauren Goodwin. She's economist and chief market strategist at New York Life Investments. She joins us here in the studio. So following that Supreme Court decision, do we have a clear view on where inflation goes from here?
I don't think we were ever going to be super clear on the impact that tariffs have directly to inflation. When you're looking at an inflation forecast, you can certainly look at which types of goods are receiving tariffs, how that might roll into the total number. But keep in mind, there is a bigger geopolitical context that's changing as well with respect to how goods are sourced, where supply chains are moving. That started during the pandemic, if not before. And so I think the conversation around tariffs and uncertainty and what it means certainly for the deficit is very reasonable, but the specific pass-through to consumers, I don't know that we were ever really going to have a great number on that.
So in terms of the deficit, you're saying this is revenue that maybe is going away that could have helped to cut back the U.S. deficit?
That's,
or no, or yes?
That's the concern. Over the last couple of days, to be honest with ourselves and really any investor that I've been speaking to, most folks' range of average effective tariff rate was somewhere between 10 and 12 and 15 and 16%. Okay. And it looks like that's where we're likely to net out regardless of the authority used for those tariffs. And so that likely means we don't have a huge change in deficit assumptions, really. And the activity we've seen on the curve, I think, suggests that the market agrees with that.
What about other inflationary pressures in terms of the president's big spending bill that he sent, that was passed last year? So is that kind of tailwind for the economy, and that's inflationary, in the long run? Tell us about kind of how you're gaming out inflation for this year.
Yeah, that's really where the rub is.
Okay.
If you look at the broader economy picture, you have, of course, tariffs and that tax on the consumer. Again, difficult to handicap, but we know it's there. Same is true of global supply chains and geopolitical challenges. And certainly these fiscal tailwinds that we see supporting the consumer likely mean that prices are going to continue moving higher. Now, it's my view, and we've talked about this a bit before, that a strong inflation print a couple times in a row is probably one of the more disruptive events for this market pricing that we could see. However, it's not clear to me that that's going to be the mechanism that disrupts the market here in the next couple of months. I'm watching for it, but it's not in our base case. What I think, though, that affordability challenge creates, talk a lot about how we don't really see that in the market. I don't know that I agree, because a lot of the spending and more, I'll call it populist leaning policies from both sides of the aisle that we see are a reflection of knowing that the average American is struggling with affordability.
What?
We only have a minute.
I know.
2 minutes left, and there's a lot that we want to get to.
Yeah.
Okay, so I want to get to a little bit of your view on AI and productivity. We don't have time to play the sound, but there's a lot of people talking about this right now. And I mean, yesterday, IBM was the latest example of what happens to a stock that people think is under threat from AI. The productivity side of this, how do we look at that?
So here's the real answer. None of us know. Certainly none of us in macro world know.
You're in good company saying that.
Certainly none of us in macro world know. Look, the way that productivity will be garnered from this technology is much more closely in the hands of the technology actors than in the macro and investment space. And so what we're all doing is crafting our scenarios. And one thing I'll say about our high uptake, medium uptake, low intake scenarios, they're all disruptive. Yeah. And so I think what we need to focus on, instead of the specific winners and losers, which I think are too early to identify, it's how do you get more accustomed to that disruptive market where leadership is changing the way it has been pretty regularly.
I think it's tough. And I think, the caveat is, and you are not alone, Lauren, everybody says it's early on. We don't really know. And that even the research report that came out yesterday, that it's just too soon to kind of figure out winners and losers and the impact. I mean, we did Fed Governor Chris Waller talking today about the U.S. Central Bank moving towards a system-wide deployment of AI across regional banks and its D.C. headquarters. But that's, again, it's a tool that everybody's playing with.
Yeah, we should hope that they are, right? Everyone, yes. The more we use AI, the more unfireable I botched that, but the better it is for us.
Your job is safe for today.
Someone in the world said, if you're not using it, you've just got to start. Otherwise, you're behind already. Lauren Goodwin, you rock. Thank you so much. In fact, we're going to continue talking about AI, Meta doing a deal that caught our attention.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got a rally in tech firms underway with the Dow, the S&P, NASDAQ all advancing. S&P right now, though, off session highs, up 46. That is a gain of 0.7%. The Dow doing a little bit better, up 0.8%, up 376. Yesterday, the Dow swooned more than 800 points. NASDAQ up 0.9%, with the NASDAQ 100 index up by 1%. 10-year at 4.03%, the 2-year 3.45%. Gold is now down 1.5%, 51.48 the ounce. Silver trading lower by 1.7%, 86.70 the ounce. And West Texas Intermediate crude oil down 1.1%, 65.62 a barrel. Meta Platforms will deploy 6 gigawatts worth of data center gear based on processors from Advanced Micro Devices in a blockbuster deal. Shares of Advanced Micro Devices, they are surging by 8.8%. Meta Platforms up 0.2%. A whole lot more on this story coming up with our Ed Ludlow in just a moment. Again, recapping here, we have got the Dow, the S&P, NASDAQ all advancing, but your key takeaway at this hour, S&P off session highs up by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pella, Tim and Carol. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters. So among our most read stories on the Bloomberg today, Charlie just mentioned it, has to do with Meta Platforms doing a mega deal with Advanced Micro Devices. It's a blockbuster one that marks a win for chip makers' attempts to catch up with NVIDIA. So let's get right to it. With us is Bloomberg Tech co-host Ed Ludlow, airing every Monday through Friday at 11 a.m. Wall Street time on Bloomberg Television. Ed out there in our San Francisco News Bureau. Ed, walk us through the particulars of, I'm not sure what to call it, arrangement, partnership, deal? What do you want to call it?
Well, it's a deal. For sure it's a deal, and I'm sure the ink's dry on it. But, you know, it's 6 gigawatts of capacity. That's like the equivalent of the output of 6 nuclear reactors. You can power millions and millions of homes with that.
Holy shit.
I'm just laughing because I want to see the power, Ed.
Well, it's you know, people have been posing really good questions, which is like a very simple question is, why do we talk about data center capacity in terms of gigawatts and not like in dollars or number of chips? Mm-hmm. And the reality is, like, at a base level, data is transferred within the server inside the data center using electrons, and it requires electricity to power it, you know, and that's why we measure it that way. But for AMD, it's important, right, because it represents tens of billions of dollars of revenue over that period, and it's a kind of vote of confidence from a very large data center operator on their latest technology, which starts with MI450, and the roadmap goes from there.
So much more powerful to say how much power will be created or how much data center capacity versus saying we're going to buy a jillion chips from you.
Yeah, well, there are loads of reasons for that. In part because, like, AMD's story is now mirroring what NVIDIA went through, which is, we used to talk about NVIDIA as just having a great chip, single GPU, as if it was something you could sort of hold up in your hand, and it doesn't really work like that. You know, AMD does the whole design of the server, and the server is power hungry, you know, and it puts a burden on the grid. But that's why we talk about it in those terms, in common parlance, in gigawatts, because it explains the scale of the compute. Right, and this is massive, massive scale. The average size of a data center right now is like 300 to 500 megawatts. So the fact that these two are committing to 6 gigawatts over time, it is really big. But note that, like, Meta's talked about all of this. You know, by the end of this decade, having tens of gigawatts online, and beyond that, hundreds of gigawatts. You know, for what they want to achieve in AI.
So, Ed, let's talk about the financing of this and whether or not they're like explain the equity involvement, because as part of the arrangement, Meta will receive warrants to buy 160 million AMD shares in stages. Does that mean that let's say AMD's price doesn't go up to, you know, $600 per share, which is in the agreement? Does that mean that Meta won't own that portion of AMD stock?
Yeah, so they are mandatory and they are operational and financial goals. So in one scenario, which I think is the final tranche of how it's structured, AMD share price would need to hit $600 a share. And let me just look down at my screen.
213. 213.
Okay, well, so there's some way to go, right?
Yes.
And so, but it works in both directions. this, in terms of what AMD gets, AMD will book revenue on this. Meta will pay AMD for the server designs and computers. And so there are operational milestones. In other words, Meta has the right to act on those warrants if it actually builds these data centers and actually, deploys them.
So as of now, and in the near future, Meta won't necessarily be a shareholder of AMD as a result of this deal.
Yeah, it is structured at different prices. And, what's interesting about it is it's almost identical to what AMD did with OpenAI. OpenAI was also offered warrants for $160 million, 160 million shares, but they were set against very clearly structured operational goals. In other words, until somebody has dug up the ground, put the data center in and switched on the computer, nothing happens. And OpenAI is still a little ways off from that happening too.
Okay. Is anyone getting pushed out or left out in the AI race by this deal being done? Is anybody saying, wait a minute, what are they doing?
The other way to look at it is through Meta's lens. Meta literally just did a similar deal with NVIDIA. And what's so interesting, right, is that they framed that deal in the millions of chips. And, going back to what I was saying about a moment ago about gigawatts, but it's a similar arrangement. And so Meta is doing three things. It is a massive buyer of NVIDIA gear. It's a massive buyer of AMD gear, but it also deploys a lot of resources internally to develop its own custom accelerators. And, you either accept or don't the base position that all of these companies that are working on AI are supply constrained. In other words, they don't have access currently to enough compute to achieve the things that they want to do. And so to de-risk that, they are diversifying the sources of that compute in different ways.
Listening to that, and it makes me think about talking to people in the world of power generation and just saying how a lot of the hyperscalers were doing deals with a lot of different utilities just to make sure that they're covered, and that all those contracts or initial maybe conversations weren't going to all pan out. And I guess that's what I'm trying to, when I hear this, it sounds like Meta being smart, making sure its supply chain is robust internally, externally, as much as it can. But it also makes me think a lot of this sounds like insurance policies. And if the demand ultimately isn't there, or it doesn't, the ROI isn't there, this starts to come undone, right? Is that the big question?
There's an element of future-proofing. So the way that Mark Zuckerberg explains it is, remember, he sat next to the president and promised to invest $600 billion. And more recently, he's talked about the risk of misspending about $200 billion. And to Mark Zuckerberg, the greater risk is to not spend it, because then you won't know if you'll have the tools available to you to develop the AI models that you think are necessary at the time. It's also another reason why we track that PJM data. I think we've on Business Week talked about this before. So PJM is the biggest utility basically on the Eastern Seaboard, and they actually revised down their peak demand forecast because, to your point, lots of things get announced on paper. They sit on electricity demands. They never build the things. And so we're trying to understand what's really being built on the ground.
Yeah. And I guess too, if we think about how fast this stuff has just accelerated in recent years, Ed, maybe things could get more efficient. Maybe not as much electricity will be in demand as some analysts have said. I don't know. We are speaking with Ed Ludlow. He's the co-host of Bloomberg Tech on Bloomberg TV. He joins us from our San Francisco bureau. Ed, a real feather in the cap for AMD and Lisa Su, right?
Yeah, they have tried to differentiate themselves. In any given quarter at the moment, AMD will book $10 billion of revenue for absolutely everything it does. NVIDIA's just data center business is $50 billion a quarter. And so, that shows you where they are right now. Now, their pitch has been an engineering-focused pitch where, particularly in inference, in other words, running the models, not training them, is where their technology performs best. And that was a big part of this, to say one of the reasons Meta is doing this with us is that they will co-engineer those later generations of data center to use AMD's technology, right? They'll work together, the different engineering teams, to make them work as efficiently as possible. In a world where right now, NVIDIA dominates largely for training, but dominates generally in data center. And then you have Google's TPU, its own custom chip, which is good at both training and inference. And so again, this is about Meta saying what are our options here? AMD is a good option for that bucket, which is like specialized inference, as far as we can tell.
Yeah, and it's also just kind of interesting looking at it from a stock perspective. I mean, AMD is soaring in today's session. You know that, we're up about 9%, but AMD is little changed on the year. NVIDIA is little changed on the year after, strong runs last year. I mean, investors are, still being kind of cautious, right, when it comes to this group, Ed.
Yeah, I mean, I think back to October when AMD did the deal with OpenAI and the stock jumped 25% or whatever it was. So people have short memories. Like, your partnerships are relative in the eyes of the market. This was a multi-year thing going into the start of 2026, right? So like NVIDIA's up modestly, but it had grown triple digits in the past whatever years, and it's now trading at relatively low multiple based on its forward earnings. So people are kind of like, okay, let's cool it a bit.
Hey, we've got about a couple of minutes left here. Want to ask you about Anthropic, also on our radar. Stocks, actually the market overall kind of rebounding as they said it was expanding the reach of its Claude chatbot to build partnerships in the software and services sectors. And we know this has been a space that keeps getting beat up by the AI scare, that AI is going to kind of take away all their business. I'm trying to understand, AI
it's
working
really
with software firms, or AI a threat, or we don't really know yet.
So I'll try and summarize all of it, because there were several, say a dozen stocks that moved to the upside based on this partnership with Anthropic. Anthropic has a very competent model, Claude. Historically, it is focused on coding and making coding more efficient and getting rid of backlogs. All it's basically now saying is that they have an agentic platform that is a platform. Instead of being a standalone tool, you basically go to any given software company, look at the thing they already do and say, wouldn't it be great if Claude just worked within that? Intuit is a good example. People will use Intuit for their tax returns as consumers, and small and medium businesses will as well. Imagine if you actually went onto that platform and there was an agent, and by agent we mean an AI that's authorized to do something. That's what they came out and said today.
So just a minute left, Ed. SaaS companies. Well, actually, no. I'm sorry. We gotta go. I want to talk to you forever.
It's too much. Yeah,
we're gonna have to have you back soon. I'm sorry for jumping the gun. Ed Ludlow, he's the co-host of Bloomberg Tech on Bloomberg TV.
It's the story that keeps on giving.
I know. SaaS companies, and the SaaS companies are at risk. Anyway, that's a preview for what I'm going to ask Ed about offline, and I'll share the answer.
He's not going anywhere. He's coming back.
I'm not going anywhere.
He's one of our faves. Ed Ludlow, of course, co-host of Bloomberg Tech on Bloomberg TV. Catch it at 11 a.m. Wall Street time on Bloomberg Television. Hey, looking ahead to the weekend, catch stories like the latest on AI and how it's impacting our world. You can do that now on the weekend. On our new show, it is called Bloomberg This Weekend. David Gora, Christina Raffini, and Lisa Matteo bringing you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. And yes, I'm guessing AI is going to creep into all of that. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app Saturdays and Sundays starting at 7 a.m. Eastern.
Hey, well, speaking of AI, coming up next, tracking AI's impact on our investing landscape and where exactly investors are going in real time. Betterment CEO Sarah Levy is up next. This is Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks holding on to gains ahead of the State of the Union tonight. NVIDIA tomorrow with the Dow, the S&P, NASDAQ off session highs, but remaining in the green. S&P up 0.7. The Dow right now up 0.8%, higher by 372 points. Yesterday, you recall, the Dow was down more than 800 points. S&P right now up 48. NASDAQ Composite Index up 220, up by 1%. The 10-year at 4.03%. Spot gold currently lower by 1.4%, 51.55 the ounce. West Texas Intermediate crude oil down 0.6%, 65.90 a barrel. And Bitcoin at 64,450 on Bitcoin, down 0.2%. Novo Nordisk plans to slash the U.S. list price for its blockbusters Wegovy and Ozempic next year as the drug maker struggles to claw back a larger share of the obesity market. Shares of Novo Nordisk, the ADR, is down now by 2.4%. Eli Lilly down by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett, and that Carol Massar and Tim Stenovec is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, something on our mind every day, it's how AI impacts our investing world. In fact, one of the most read stories on the Bloomberg today, a new academic study finds that a machine learning algorithm can predict about 71% of mutual fund trading decisions, suggesting that much of what active fund managers do follows patterns machines can learn.
Do you think CEOs just wake up in the morning and they're like, okay, is Anthropic going to release something today that's going to cause my stock to fall by 10%?
Yeah, I think so. We definitely seen that played out over the last couple of weeks. And we mentioned earlier that Fed Governor Chris Waller talked about how the U.S. Central Bank is moving toward a system-wide deployment of AI across regional banks and its D.C. headquarters. So, yeah, there's a little bit of the AI impact going on today.
That's what we're talking about with Sarah Levy. It's this week's Women, Money, and Power segment. We speak to some of the most influential women from across the business world. Sarah Levy is CEO of Betterment. She joins us here in the studio. So when you think about AI, not just how you're using it at Betterment, but when it comes to investors and how they're investing in it, we know the companies that are have been the big beneficiaries in recent years, and the mega cap tech companies and the so-called hyperscalers. But how else are these investments manifesting on your platform?
So we recently launched self-directed investing. We've historically been an automated platform where our customers aren't necessarily making choices about individual stocks to invest in. They're more sort of long-term time horizon and set it and forget it. I think the biggest manifestation right now is more the volatility and the uncertainty that we're seeing, right? And I would say, if a year ago it was unbridled enthusiasm for AI, now it's more of a catastrophism sort of situation, right? I think there is like a catastrophizing. I'm not sure if that's the right word, right?
But I like it though.
But I do think that, this is the biggest technological shift, certainly in my career. And you have to embrace it. I think we're at a sort of embrace or die moment.
I'm glad you said this.
I think we want to go. Yeah, go.
Are we going to media?
Exactly.
Okay, because this is you are a former media executive, and you've transitioned to becoming a financial executive. And we were just talking a little earlier. And
former CEO at Nickelodeon.
We've talked about this in the past, and how the transformation from, Netflix and YouTube coming and eating the lunch of the traditional linear TV networks. You think this is a bigger fundamental shift?
Absolutely.
No question.
No question about it. Look, I think the employment threat. So on the one hand, I think there may be an overreaction because it's so broad-based, right? I don't think it's an overreaction in terms of the impact this is going to have on employment, on productivity. I mean, it is unbelievable the speed of adoption. And so we are embracing AI both sort of in our daily lives, right? In every possible job, reinventing every process. How can you be more efficient? And then saying, how do we put this in front of customers, right? How are we thinking about feature sets that customers want? And, people's money is interesting because they're nervous. They're both excited and they're nervous about the implications, right? Because this is my money, this is my personal information. Is it going to get out? How are you using LLMs? So there's a little bit of that fear for customers. Right. So I think you have to be careful. So we've spent the better part of 2025 actually putting the guardrails, the infrastructure, the compliance, all of that in place so that we can now rapidly deploy features for financial advisors and for retail customers. And I think it's so exciting.
What kind of features do customers want, Sarah, at this point? And what areas? Is it buying a home, mortgages? I know you guys have a deal with Rate, right? You're working with Rate.com.
Yep.
So I'm just give us an idea of what people want right now.
So two different customer segments. So financial advisors want more productivity. And when I think about sort of the early days of the robo, essentially what we preach, what we do is we lower the costs and we simplify and take sort of time and money out of the equation for the advisor. So this is just that on steroids. So I think every one of our tools, we're saying, how can AI enhance, lower the cost, speed up? So that's on that side. Same thing for plan sponsors, because we have a retirement business. Plan sponsors, you have plan sponsor documents that are, pages and pages long. They sometimes need to know some specific provision. They don't want to read 100 pages. They want to ask a chatbot, where can I find X? And so those are perfect applications of the technology. Retail investors, interestingly, have told us they want performance analysis. They want account recommendations, and we actually have our first feature launching next week. I'm pretty excited about. And they want I'm trying to think about what the third one is because we've done a ton of research with them. It's escaping me at the moment.
Do they want things that you can provide at this point?
They definitely want things we can provide.
Yeah.
What do they want that you cannot provide yet? Where the technology just isn't there? Like if you could wave a magic wand and it would appear.
Well, I think as a fiduciary, what is challenging is how do you ensure, and I think this is getting better every day, but how do you ensure there's not the hallucination? So how do you maintain sort of your fiduciary responsibility while sort of,
that's what I was thinking when you were talking about the plan sponsor part of this, where you're to the point where you trust an LLM enough to actually upload a plan sponsor document to give you an answer for, so you don't have to read through 100 pages. You're there at this point?
You're there. Yeah, we're there.
Okay.
We're there. And usually what you do is you can link to the doc. I mean, the beauty of something like that is you can link to the document so you've got the source right there.
But I'm still like, I don't know.
Yeah, it's funny.
At least with my experience in using this.
I was actually having a conversation with somebody kind of planning for our Bloomberg Invest event next week and talking about hallucinations and this idea of like where you ask the question or how you ask the question, like, and you kind of want a model that says, I don't have an answer for you. Rather, to create the models that say either I don't have the data or this question isn't whatever.
Well, that's right.
But I just don't have the answer.
That's
for you.
actually been an important part. When we actually started our exploration, we went broader. We said, like, what if there's a chatbot that can answer all your financial questions? And we realized that that's too broad. And so we actually dramatically, for our first launch, we dramatically narrowed the scope so that we could really contain it and put the guardrails around. And so if it's a question that we haven't trained it on, it'll just return you I'm not trained to answer that.
I mentioned that you guys are doing stuff with rate.com. Are people going after, tell us in terms of mortgages and home buying, it's such an important indicator of the economy.
Yes.
Are we seeing people more interested or what can you tell us?
It's brand new.
Okay,
so,
sorry.
It's okay. It's been about 10 days. They're a great partner. I think we're seeing, interestingly, so far, again, small numbers, but so far more refis than new mortgages.
Who's refiing right now?
I guess if you've had a mortgage for 10 years.
If you've had a home for a long time.
If you've had a home before 2020, rates were higher.
6%.
But if you didn't refi when rates were zero, you kind of missed the boat.
Yeah. We are giving 75 basis point below market, so that's pretty
real.
compelling. Yeah. That's real.
Yeah. I guess maybe you're refiing if you took a loan out in 2024 or 2023. I don't know.
You could do it.
Yeah,
I don't know. Or 2018.
I don't know. I mean, we have to remember still, historically, it's a low mortgage rate environment. Right?
If you keep saying it, it'll come true, Carol.
30, 40 seconds. Just top of mind for you as you kind of go about your business and you guys are thinking about the future and so on and so forth.
I think more investment flexibility for our customers. We started as an automated platform. Yeah. We launched self-directed investing. And in the next year, you're going to see us sort of filling in the middle so that more customization because investors are getting more sophisticated and they want to control and make their own choices.
Love it. Love having you here. Thank you so much. Such a pleasure. Such a pleasure. Sarah Levy, she's CEO of Betterment, joining us right here in studio. And as we head to a break, a quick check on the market trade because big day, State of the Union a little bit later on. We'll see what the president says that could move markets. Having said that, AI scare trade, not really happening today. There seems to be a little bit of calm. We're up about 0.7% on the S&P 500, up 50 points. Dow up more than 400, if you care about that index, up 0.8%. NASDAQ 100, Tim, up 1%.
Okay, for the year, the NASDAQ 100, NASDAQ composite still down 1.7%, but the S&P up 0.6%. Coming up next, stocks on the move. It is a Bloomberg Businessweek Daily.